Over 7 months ago, on the cold morning of January 24th, a 106-page report shook the mighty Adani empire. While the group scrambled for answers, its companies lost close to $12 billion in market value in the next few days. And even as the conglomerate was recovering from the blow, it has been stung by yet another report, which allegedly builds on the previous Hindenburg accusations. The August 31st report by Organized Crime and Corruption Reporting Project, or OCCRP, said that hundreds of millions of dollars were invested in the Adani Group stocks through opaque investment funds based in Mauritius. It said that in at least 2 cases, the investors turned out to be related to the Adani family, who are majority shareholders. In 2017, the stocks held by these 2 individuals were valued at a whopping $430 million. OCCRP is a global non-profit network of investigative journalists. The 2 individuals, Nasser Ali Shaban Ahli from UAE and Chang Chung Ling from Taiwan, spent years buying and selling Adani stock through offshore structures that obscured their involvement and made considerable profits in the process. These investors used 2 funds, Emerging India Focus Fund or EIFF and EM Resurgent Fund or EMRF to trade large amounts of shares in 4 Adani companies between 2013 and 2018. These were Adani Power, Adani Enterprises, Adani Ports and Adani Transmissions. Over the years, the stocks were bought at low prices and sold at much higher prices. Moreover, the money was channeled through 4 companies, which were either owned or controlled by Ahli or Chang. From these companies, money was sent to a large investment fund in Bermuda called the Global Opportunities Fund or GOF. Later, GOF subscribed to 2 funds, EIFF and EMRF. So, why is that a problem? The main reason why the share trade by these 2 individuals is a problem is that it allegedly breaches Indian law. According to the report, Ahli and Chang have long been related to the Adani Group companies, making them insiders and associated with the promoters. According to the Indian market rules, promoters of a listed company cannot own shares above 75%. In this case, with the stake of Ahli and Chang, the total promoter holding allegedly crosses this threshold. This, according to experts, is a way to create artificial scarcity and manipulate stock prices. If the relation is established, it will be a breach of law and would also corroborate the findings in the Hindenburg report. So, are Ahli and Chang related to Adani Group promoters? According to OCCRP, Ahli and Chang have served as directors and shareholders in Adani Group companies and companies associated with Vinod Adani. In a 2007 case filed by the Directorate of Revenue Intelligence or DRI, Chang has been described as the director of 3 Adani companies. Ahli's name has also been mentioned as related to a trading firm that was involved. In another 2014 case by DRI, Chang and Ahli have been mentioned as directors of 2 companies, which were later owned by Vinod Adani. In the Hindenburg report, Chang was also either a director or shareholder in a Singapore company that was listed as a related party in a disclosure by an Adani company. The latest findings revealed that Ahli and Chang paid a Vinod Adani company to advise them on their investments. Vinod Adani has recently been acknowledged by the conglomerate as a promoter. So, the allegations point out that Chang and Ahli were, in fact, linked with Vinod Adani, who has been named as a group promoter. If the links are established, it could mean that the conglomerate breached the 75% holding rule. On August 31st, the Adani Group issued a statement denying the allegations. It said the reports appear to be yet another concerted bid by Soros-funded interests, supported by a section of the foreign media to revive the meritless Hindenburg report. The OCCRP is funded by the likes of American billionaire George Soros and Rockefeller Brothers Fund. The group added these claims are based on closed cases from a decade ago, when the Directorate of Revenue Intelligence probed allegations of over-invoicing, transfer of funds abroad, related party transactions, and investments through FPIs. It added that an independent adjudicating authority and an appellate tribunal had both confirmed that there was no overvaluation and that the transactions were in accordance with applicable law. The group also said that the matter attained finality in March 2023 when the Supreme Court ruled in its favor. So, is there anything new in the report by OCCRP? And what are the allegations made in the new report?
So firstly, is these set of allegations completely new? No, it is not any completely new set of allegations. It is the same sort of allegations or same sort of reports that Hindenburg sort of summarized, collating from various sources. The large allegations are three in number. One is this over-invoicing of imports into the country. So from that perspective, sending more money outside of India to foreign jurisdictions, and from using that money to invest through shell companies into Adani Group shares itself and trading in Adani Group shares and inflating, or rather buying and selling and transacting in Adani Group shares and raising the stock prices of Adani Group companies. And that is where the second allegation is that of violating the minimum public shareholding. Because Adani, in many Adani Group companies, the promoter already owns a 75% shareholding. So these entities, if they are taken to comprise or to make up, to be related to the promoter, that means that they would have violated the MPS securities regulation. That is the second allegation. The third allegation is that this is insider trading and there was round-tripping of funds into the country.
After the Hindenburg report came out, the Supreme Court formed an expert committee to look into the matter. It also directed SEBI to conduct an inquiry and see if there was any violation of the related party or minimum shareholding rules. On May 19th, the 6-member expert committee told the Apex Court that SEBI has drawn a blank in its investigation into alleged violations in money flows from offshore companies. Last week, SEBI told the Apex Court that it had completed the probe in all but 2 allegations against the Adani Group and is still awaiting information from 5 tax havens on actual owners behind foreign investors investing in the conglomerate. It also submitted its status report to the Apex Court. The hearing on it is expected to take place soon. So, will the new OCCRP report have any impact on these proceedings?
Whether these OCCRP will influence SEBI or Supreme Court, I don't think so. I don't think it will influence those investigations per se.
At the bourses, shares of 9 out of 10 Adani Group companies settled in the negative zone. The likes of Adani Energy Solutions, Adani Power, Adani Enterprises, Adani Ports, and Adani Wilmar tumbled up to 5% on the BSE in August 31st's intraday, before settling lower in the range of 2 to 4.3%. Despite this, the expert we spoke to indicated that the new OCCRP report doesn't appear to be a Hindenburg 2.0. However, it does highlight the fact that the allegations against the group are yet to be settled to the point where it can go back to business as usual.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
He's about to land his dream job. Business Standard.